G'day everyone, welcome to another CSBP Fertilisers Market Update. I'm Johnston and joined as ever by our Sales Strategy and Reliability Manager, Ben Sudlow. Hello Ben.
G'day Gray, how are you today?
I'm very well, thank you. And for the first time in a little while, we've seen the exchange rate hasn't been depreciating, but in fact we've had an appreciation against the US dollar of the Australian dollar. It's probably some reasonably positive news to start off with.
I think when we last spoke a couple of weeks ago, we're probably up a couple of cents. And look, I think the Reserve Bank is meeting Tuesday, tomorrow. You know, who's know what that will bring, but the higher exchange rate's definitely doing something to buffer some of the increases in price that we've seen on the P and the N over the last 2 weeks since we last met as well, Gray.
Yeah, so you've stolen my thunder there. I was starting with the good news and then bad news, I guess, on nitrogen pricing. We saw a period of time there where FOB pricing for P and N had been reasonably stable, but we've really seen FOB on nitrogen accelerate in the last couple of weeks.
I think since we last spoke, Gray, urea's up $15 to $20. And I was just doing a bit of a reference check about when we spoke early in January and how much has it moved in that time. And it's up about $75 a tonne since January. You know, in Aussie dollar terms, pick your exchange rate, $115, $110, $120 a tonne in that time. And that's obviously now translating through to reflected pricing for urea that would be picked for seeding those early shipments we've got coming in.
And is there any sense of what's driving these changes in the global markets?
You know, we seem to talk about India every 2 weeks, Gray, and you know they came in last time we spoke. They'd just taken a tender, and then there's anticipation in the market they're going to come back again, and they're just coming in for small chunks, or relatively small, 500,000 to 1 million tonnes, small, filling up the order books of the producers and the traders, but not taking a huge chunk, and then they have to come back to the market again. And the anticipation of them coming back again has seen the market, rally again now in the last couple of weeks.
Yeah. So overall, a situation where, particularly on the west of Suez side of the market that we play in, market is reasonably finely balanced between supply and demand. So any little demand spike can create a spike in price.
Well, I think in this case, the anticipation of demand spike. There's still some possibility that China comes back in the market in April, and perhaps that does swing the balance back to supply over demand. But that's yet to play out, and a little way off for our market too.
Okay, a long way of saying that urea FOB pricing has gone up, and probably that will equate to an increase in the landed price here in WA. If we look at Flexian UAN, on average that seems to follow urea, but that has sort of...
It had lagged, I mean, it has lagged, and it's starting to definitely move up. And it moved up last time we spoke, and it's moved up subsequently. There's pressure on pricing to see those prices go up in the local market over the next couple of months. On our side of things, we've got stock for that first top up, May, June. Even despite the price moving up, it's still relatively well priced compared with urea, which we've spoken about before. But the other one, ammonium sulphate, there's talk in some of the publications that people are buying ammonium sulphate but because it's better price than urea. That hasn't moved anywhere near to the extent on a nitrogen content that either urea has or Flexian has as well.
And we've got that product available to contract as well?
Yes, we do. Yep.
And you're looking at picking that up, in the middle of March sometime?
We should have stock first week of March, and then that'll just be constant supply through to the post application.
Okay, comprehensive wrap up of nitrogen products there. If we look at phosphates, any action in the FOB pricing there? I guess it's coming towards the tail end of our procurement period.
First time in some time there's been a little movement up in FOB prices, and we're seeing probably partly on the back of nitrogen, DAP prices moving up slightly ahead of MAP prices, given the increased nitrogen content of DAP over MAP. And they're up by $8 to $11 a tonne, sort of week on week. But again, how long that lasts for, I don't know. But as we're coming to the sort of back end now, it's almost the point where any increase or decrease becomes less relevant on market, given that much of our product is priced.
So the critical message then is less on a price message on phosphates and more on supply availability. We need to know about it if you have some product that you'd like to collect, and probably it makes sense to be coming to pick your product up now.
Yeah, so two things, Gray, on that. Firstly, we've seen the dynamic of N, P and K, where N is relatively well priced. It certainly has been relatively well priced compared with history. It's sort of retraced those very high prices we saw over the last couple of years. K, potassium, definitely is retraced back to sort of normal levels. And P has not. It's still relatively overpriced relative to grain. And in that context, we, like many others, go, well, if there's any risk that that's going to go down in the ensuing 6 to 8 months, do we really want to be carrying excess closing stock of product that may be worth less in, come December this year? on that basis, we want to run pretty tight to what customers' needs are. So 2 things on that. If you haven't committed, please do so, because we're just about at the end now of volumes on the last vessel. And the other one, which we've spoken a little bit before, is the actual physical closure of the Kwinana bulk jetty last week in March, early April. If we get an early rain and people want to start going in, seeding, getting a little bit of product on hand before that, the backup of ships that happen through from week 2, 3 of April, we'll be still expecting to see phosphate ships coming in, which could be a bit tighter on supply, particularly Kwinana.
Okay, some clear messages there on nitrogen, and then some clear messages on phosphates in terms of making sure you got supply availability. We've been talking a bit over the last couple of months around supply reliability in nitrogen and how the pool contract's a good solution to that. Probably customers have another week or so to get themselves into that pricing arrangement for their nitrogen. Remember that is looking at taking our average cost position and adding a set margin to that over that sort of probably 8 or so urea ships we'll be procuring during the February to May window. So yeah, if anyone's interested in taking a position there, probably to sort of speak now or forever, hold your peace on the pool contract. Ben's given us a nice rundown there of what's happening in global markets. In terms of the prices that are available here in Western Australia, we maintain a nice list of a subset of our prices on our website at csbpfertilisers.com/fertiliser/prices. And you can jump on there and have a look at the list price of a product that's relevant for collection today in a small quantity. If you want to pick up a bigger quantity and you want to get a more sophisticated bundle of pricing, of course, you should catch up with your account manager to get a quote. But our list price for a collection of small volumes on the day at the moment from Kwinana is Flexien, it's at $662 a tonne, Urea $912 a tonne, K-Tel Extra it's at $1057, Agras Extra at $915, Ag Flow at $1093, and Super Extra at $522. That's our list pricing today, but contact your account manager to get a quote that's tailored to your specific requirements. Okay, that's been an update on what's happening in the global market and the local market. Anything else from you, Ben?
No, that's all for today, Gray.
Thank you all out there in Fertiliser World, and thank you, Ben. We'll see you all soon. Bye-bye.
This podcast is provided as general information only. The content of this podcast is not a recommendation and has been prepared without taking your objectives or circumstances into account. Before acting on the content of this, you should consider its appropriateness to your circumstances and seek independent advice.